Welcome to the Wealth Roundtable, where we have conversations with leaders shaping the future of wealth. My name is Priska and I'll be your host. Glenn, welcome to the Wealth Roundtable. How about you tell us a little bit about yourself?
Well, hello, and nice to be here. I'll bring you all the way back to when I graduated college. I got out of school, got onto the buy side of the investment world in New York, and within a year, I moved on to the sell side. I think I had more of a personality for that. So back then, it was
Yeah.
so long ago that we were called stockbrokers. And then I went through all the permutations of financial advisor, wealth manager, where we are today, where it's all holistic. And along the way, I didn't really like the investment models that were available for use for my clients. So I built my own under the moniker rules-based investing. We actually own that language. It's trademarked. So everything we do is dictated by proven sets of rules. It takes emotion out of the equation where all the problems are, fear and greed. And we started to build out a suite of investment products, and eventually a firm called Advest that we were at, a broker dealer, East Coast, asked us to put our models on the platform. And suddenly we were investment managers, not only wealth managers. We were kind of both. We had great success, but people really liked the concept, and we raised $250 million there. Merrill Lynch eventually bought Advest, convinced them of the same thing, and raised $1.2 billion there. But we didn't have the freedom we wanted, so we founded Empirical Asset Management, where I am today. I'm the chief investment officer, and we built out even more products and uh, relaunched our asset management division in 2021, which was lots of fun to do. And we've had some pretty good success in the company. We've quintupled the size of the company in the last 4 years. We're winning all sorts of awards for performance. Matter of fact, as a wealth firm, we were just awarded this week. Newsweek gave us a 5-star rating, the highest you can get. Only one of 8 in Massachusetts, and only one of 300 in the country. Has a lot to do with how we service our clients and our growth and all that fun stuff. So there's a little background on me.
Yeah, congratulations on that from Newsweek. That's huge.
Thank you.
Yeah. And as CIO of Empirical right now, what part of the business keeps you the busiest behind the scenes?
Really, what it is now is, in the last few years, in 2022, we were introduced to a company called Trefis. It's an AI research and technology firm, and they are using AI uh, to build investment portfolios. So investing with AI, not in AI. It's not investing
Mm,
in NVIDIA. It's actually
yeah.
using AI. So every industry is going to infuse that into their businesses to make them better, cheaper, faster, more profitable, whatever. Including investment modeling. Investment modeling is a little slow on the uptake on this, so we're kind of happy about that because we have this company, Trefis, that spent a decade building this, a bunch of guys out of MIT. So that between the leads that they drive to us through AI and the portfolios that they're building are keeping me busy. Aside from the normal stuff, staying up with the proper asset allocations, we can talk about that if you want to a little bit, and the infusing AI into the operational side of the business as well. So those are the things that are keeping me really kind of super busy right now.
Yeah. And AI seems to be the future. I believe the last couple of years, that's what most industries have been talking about and mainly focused on. You said you guys already adopted that around 2021 or
22, we got introduced.
22?
23, and the reason we got introduced, we're the rules-based guys, and what Trefis built was the future of rules-based, and they needed an investment partner because they're research and tech guys. So we deliver all their models. Interestingly, we decided at the beginning of this year to go look around for competition. We were kind of surprised we didn't naturally see any,
Yeah.
thinking that every industry is getting on top of this, and it's serious. It's a serious fourth industrial revolution, if you will. So one of our guys made an effort around the whole globe and only found one other company that had any live products. It's actually a live index from a company in Paris called Queensfield. And it was so interesting that we were so happy to talk to each other. It was, the only two that were similar. We were having
Yeah.
fun talking. We end up with a relationship with them, and we're going to launch an ETF of his products. So we have a second AI company that called Queensfield. The company's run by a gentleman, Arno Di Savici. He was the ex CIO of Deutsche Bank and ran the S&P Global Quant team. So he's got serious pedigree, and he saw this trend back in 2014 and did the same thing Trefis did. He built a system that could take advantage. So we kind of feel like we're in the leading edge of this with two different companies, which is kind of fun.
Yeah, that's amazing. And what has been the biggest driver for growth for you guys this year?
So specifically that these AI portfolios, and one of the things that Trefis does is they provide content to uh, sizable companies, Fidelity, Forbes, NASDAQ, E-Trade, TD Ameritrade, and others. And what that does is, they individuals and advisors seek that information out and then find that they can contact or connect with me and learn about our portfolios, and that's driving a lot of inflow into our business. It's a really unique way, to own the narrative and keep us busy on the marketing sales front, if you will.
Yeah. And Trefis, you guys are using that specifically for just the investment part of AI for the business or the operational or both right now?
Not the operational. So that's another challenge. Thinking of challenges going forward. Um, Infusing AI into the operational and marketing and servicing side of the business, that's where you see all the activity in the wealth management practice right now,
Hmm.
wealth management business. You don't see it on the investment side. We're happy
Yeah.
about that, but we also are challenged with infusing it into our wealth management side of the practice, like you say, operational trading, servicing, all that. We're not on the front edge there, actually. And that stresses us out a little bit, but we are seeking partnerships because we think others are ahead of us on that, and we want to tap into that. So it's kind of a trade-off, and that's a big challenge in the world. I think a lot of the old world firms, whether it's Fidelity or Merrill Lynch, or they have clunky old technology that they've been using for years, and they haven't really infused AI, and will struggle infusing it because they have so many different legacy systems that don't even talk to each other. So there's these entrepreneurial firms that built it from the ground up in the last 3 or 4 years, and they're going to leapfrog those old school companies, and so we're going to try to tap into that by partnering with those type of firms.
Yeah, which is very exciting because, again, AI is the future. And usually, with these massive companies, they are currently investing billions and billions of dollars just trying to catch up, right? So, that is where the future is headed. Is there anything that has felt a little harder than expected this year when it comes to growth?
When it comes to
Growth.
growth, uh, we're in a luxurious position. I feel like we've had great challenges. I think there's other challenges out there which relate to having the right asset allocation for clients. I mean, it's modern portfolio theory dictates like 60% stocks, 40% bonds for a moderate risk portfolio. But that's all under the guise of modern portfolio theory that was developed in 1952 by Harry Markowitz. And that's an old tool. And we're using these old tools. It only
Mhm.
worked because rates went down for 38 or 39 straight years. And that made it easy. Having a bond component was easy. Knowing exactly what you should have in to replace bonds to get risk controls and and still some return is difficult. I think for many, we actually follow something quite different, non-normal risk. We're not modern portfolio theory guys. That's led us to having lots of alternatives, lots of gold and silver in the portfolios, and we've had really good performance this year. But that challenge isn't going to disappear because now that we've had that, having the proper allocation going forward, I see a lot in the industry right now getting away from the 60-40 and trying to add in other components like we've done. Glad we've done it, on the front end. That's, I should have said that keeps me pretty busy too, making sure
Yeah.
I'm on top of that, because it really does. The other issue I think that's out there is, um, there's been this move toward private credit and private equity. And we actually think that's kind of a bunch of landmines out there. I think there could be, I think it's been overdone. And as they democratize that, and I hate when anytime I hear they've democratized it so the individual investor can get it, that's usually the last people who get in, and it's the wrong time to invest in those asset classes. So working against other firms that are talking about private equity and private credit when we really don't offer it because we don't believe in it, that's a bit of a challenge.
Yeah. I mean, I think you mentioned earlier on that alternative investments, that is something that you guys are trying to add into the business.
Yeah, so we have to do it in a thoughtful way. In our asset allocation models, we do buy alternatives, but they're not the private credit or private equity side of the business. It's commodities, and it's gold, and it's silver, and it's REITs, real estate, and managed futures. They're all in the form of ETFs, so they're scalable, and we've had them there a fairly long time. They've worked great in the portfolios in the last several years. As far as adding them into as an additional solution for our high net worth or ultra high net worth clients, difficult to add those in when we feel like there's a bunch of landmines out there.
Yeah.
So we are talking to one particular firm that kind of has an edge because they see the deals earlier than the options for the retail investors. They're seeing them at the level when the big companies are getting involved.
Mm. And since you have been in this industry for a very long time, Glenn, what
Don't laugh
major
at that. That's not funny.
No, it's a great thing. It's a great thing. I mean, I love this industry. I've been in it my entire career, and so have you. So, what major shifts are you seeing in the industry level right now?
Well, I think that one big shift is there's not a lot of the number of advisors is shrinking rapidly because there's a lot of the average age of an advisor right now is about 60 years old. So, they're thinking of retiring or they're retiring. It's one of the two. And there's not a lot of young people coming in the business. Like I said, I came in as a stockbroker. I
Yeah.
looked like I was 12 years old, but it didn't matter because I was just on the phone. It wasn't
Yeah.
about wealth management. It was about a story.
Yeah.
So you could do that back then. You can't now. You have to join a team, and it takes a while. So there's less people coming in. There's less opportunity. So you get this massive shrinkage of talented people in this business. And that's
Yeah.
making prices of the practices go up rapidly, which is kind of nice for anybody in it.
Mhm.
Private equity's gotten involved and they pay a lot of money. I think, infusing AI is definitively one of the biggest challenges on both sides, operational, marketing, servicing, that side, but also the investment management side. We've got one side of that covered. The other side, we're going to have to partner, I think, to get that done. And then I think understanding, these private credit, private equity side, those are probably the four biggest challenges that are sitting on the table right now for the wealth management business. It takes a lot of time to get the skill set. So that's
Yeah.
why, there's a lot of older people. And I think there's been a lot of question about whether AI is going to replace wealth managers. And, that's like front and center. Is that going to happen? My opinion is the way we've always viewed this business, it's a trust business. And it's very difficult for, I think, retail, investors, individuals, even institutions to trust AI completely.
Yeah.
So the way I think of it, and the way I think others should think of it in this business, or who are thinking getting into it, this is true of, I think, almost any business. When AI comes in, it's going to replace a lot of jobs. But what you want to do, use it as a tool and get between the client and the tool, and help the client, advise the client on what the tool is telling them to make sure it's the right thing. And that's where that trust element is still going to be implemented. So I don't really see the end of the wealth management business as it stands today, and just an infusion of tech to take over those relationships, because you need that relationship.
Mhm. Yeah, absolutely. And then also, when it comes to younger investors, they tend to lean heavily on tech. Maybe you just go online, you do your own trading. Maybe if you need a quick phone call to a wealth manager, a stockbroker, they within 5 minutes they want to be done. They don't actually prioritize, I suppose, the wealth management part of things. And we tend to be a little bit more know-it-alls too. So you tend to see clients a little bit older to a little bit more established, a little bit more stable in their lives that trust wealth managers as well.
Yeah, I think a lot of young people are doing exactly that. It's the Google.
Yeah.
Look, my brothers were very handy. They were carpenters and they could do plumbing, and I couldn't do any of that. So I always hired out for that. But Google showed up one day, and I'm fixing washing machines, and you can learn anything. That's true of
Yeah.
investments too. You can learn a lot,
Hmm.
and yet the young set I think does uh, rely on that. But there's studies actually that show once they get to a level, they want a human being involved. They actually are no less prone to have an advisor at a certain asset level than their parents or their grandparents or what have you. Which again, I think it goes back to that trust element. And all you need to have happen is have a machine burn you once,
Yep.
and then you don't trust any machine, and now
Yeah.
you need somebody in between there. So I'm still confident that that makes the job easier for investors, probably better results, and it makes it better for advisors. It's just going to continue to be kind of that connective tissue of trust.
Oh yeah, absolutely. I have many friends that go online, do their own thing, lose a bunch of money, then call me afterwards. Um, yeah, it's
Does this
always
make
after they
sense?
get burned. It's
Yeah.
always after they get burned. You're so right on that. And where do you see Empirical, let's say, in the next 12 months?
We are expanding rapidly right now. I expect that our asset management business is, uh, in all aspects, we're going to grow. We're likely to launch three ETFs, AI-driven ETFs, one from Trefis, one from Queensfield, and then a combination tactical model with another firm called Helios. So we're kind of looking forward to that. Probably, end of first quarter, beginning of second quarter is when they come out, signing on contracts as we speak, and expanding the the uh, the Trefis content connections that they make for us. So that's those two aspects are going to keep us busy and are going to grow our assets. We're sitting at 600 million in assets right now, something like that.
Mhm.
A year from now, if we're not over a billion or a billion two, I'd be shocked.
So you're planning on doubling pretty much the asset under management
You know,
then?
we have a tiger by the tail right now. Trefis, and everybody's uh, able to go to their site, Trefis. You go there, they have 16,000 people hitting their website every day, and many of those people want to talk about all the topics we've talking about today.
Mhm.
And that's a major growth engine. Like a lot of investment firms, wealth firms, RIAs don't have a growth engine like that. The hardest thing in this business is growing a book of business. You might know that from your own experience.
Yeah.
And what they're doing with all this content is people are curious. They want to talk. And that leads to relationships. So we have incoming. We don't have to make the outgoing. In my early days, cold calling.
Oh yeah.
That doesn't happen.
Painful.
People show up on a Zoom like we're kind of having now,
Yeah.
wanting to learn about what is available that Trefis builds and we deliver, and we're getting, that's kind of reversing the engine of marketing in this industry, and
Yeah.
it's fun because it's educational and helpful for all the clients as well.
Yeah. And if someone is looking to work with you or connect with you, how do they find you?
Empiricalam.com. That's our website. You'll find me on there. You could schedule a Zoom meeting with me. You could call me, you can text me. I pretty much answer to anything.
Okay. Do you have any LinkedIn?
And I do have LinkedIn as well. I respond there as well. I guess there's so many different ways uh, to connect to me. I have a LinkedIn as well.
Okay, perfect. Thank you so much for joining the conversation, Glenn.